Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
Intuit, which is, of course, the maker of TurboTax, the software company reporting third quarter adjusted EPS of $1.65, handily beating the consensus estimate of under $11. It also has raised its full year guidance as well, now looking for a full year revenue of $18.72 billion to $18.76 billion. Previously, it had anticipated only as much as $18.35 billion. It sees full year adjusted operating income of up to $7.56 billion. Previously, I should say the consensus estimate is $7.32 billion. So you're looking at a boost here in the outlook, which is always encouraging for investors. And we should note, by the way, that the third quarter is the biggest quarter of the year for Intuit because it wraps in April 15th, tax day, when people buy TurboTax.
Yes, indeed. It makes a lot of sense. Hey, some more earnings coming. Ross Stores just crossing the Bloomberg terminal. First quarter results, EPS $1.47. That's a penny better than what the street was expecting. Actually, 2 pennies better than what the street was expecting. It's a penny better than the year before. Sales coming in at $4.98 billion. That's up 2.6% year over year. Estimate on the street was a little bit below that, $496. Inventories, $2.67 billion. That's up 8.5% year over year. The estimate was for $2.56 billion. So maybe a little bit of an inventory build. We do have the company's CEO saying, despite the slower start to the spring selling season in February, our monthly sales performance improved sharply month after month for the balance of the quarter. So certainly a read on consumers right now. The stock, though, guys, it is unchanged in the aftermarket.
Autodesk out with their results, of course, enterprise software company with a big focus on architectural firms. Adjusted EPS of $2.29 a share. That's higher than street estimates of about $2.15 a share. A beat on revenue as well. And here's your forecast. The company is saying that for 2026, the full year, its full fiscal year of 2026, it sees billings in the range of $7.16 to $7.31 billion, the low end of that range, above the average of street estimates. Adjusted EPS for the year, it says, will be in the range of $9.50 to $9.73 a share. The top end of that range is above the average of analyst estimates. The share is higher by about 1.8% right now.
I'm looking at what's going on with Workday in the after hours. This is the enterprise software company focused on HR and the like. Shares bouncing around, down by about 2.6% right now. The company did see first quarter adjusted earnings per share beat estimates. The company sees fiscal year subscription revenue maintaining at $8.8 billion, sees second quarter subscription revenue coming in at $2.16 billion. That matched estimates. The company does see fiscal year adjusted operating margin at 28.5%. Earlier, it saw 28%, so that's a beat there. Estimates were at 28.1%. The company still, as I mentioned, sees fiscal year subscription revenue coming in at $8.8 billion. Shares right now in the after hours bouncing around, but down about 2.6%.
Hey, guys, I want to go back to Ross Stores because we saw this stock down about now 5.4% here in the aftermarket. A little bit more commentary from the company saying, given the varying nature of tariff announcements, we are only providing an outlook for the second quarter at this time and are withdrawing our previously provided annual sales and earnings guidance. So when we think about tariffs and whether or not companies feel like they have visibility, certain for a retailer who gets so much merchandise overseas, we can certainly see that that's having an impact. And so you've got Ross Stores down almost 7% here in the aftermarket. All right, that one is down. Let me go to some of the gainers in the regular session. Palantir is on that list. At its highs today, up almost 5%. It was a top gainer in both the S&P 500 and the NASDAQ 100, finishing the day with a gain of about 1.3%. Dow Jones Barron's out reporting on the company, noting that the U.S. Defense Department, said late yesterday after the close that it had raised the contract ceiling for a program that Palantir provides. It's their Maven Smart Systems software licensees by $795 million. So basically they're saying, and analysts are noting, that Palantir stands to win from these deepening ties to the Defense Department. So this one's been on a tear this year. It's up about 65%. Advanced Auto Parts, way out performance today, up about 57%. The company reporting comp sales that fell less than expected in the first quarter, also saying that it's reaffirming their annual sales guidance, or annual guidance, based on performance to date. And the guidance assuming current tariffs remain in place for the remainder of 2025. But really some outperformance there. And Urban Fitter, also up about 23%. So a big move to the upside. The company reported net sales for the first quarter that beat the average analyst estimates. An analyst noting the strength in its namesake UO brand and are positive about the retailer's margin expansion. Stock now up more than 30% year to date. Scarlett, over to you.
All right, we have Deckers reporting results. This is the company behind Uggs and Teva sandals. They're withdrawing their full year guidance, or I should say not providing full year guidance for fiscal year 2026 because of the macroeconomic uncertainty related to evolving global trade policy. So you see that stock down about 7% in after hours trading. As for the quarter that was, for the fourth quarter, they reported net sales of $1.02 billion, just slightly higher than what analysts were looking for, which was $1 billion. And the EPS for the fourth quarter was $1 a share. But once again, that's backwards looking. Deckers is not providing a guidance outlook for this full year, but it does say it's capable of returning value to shareholders. Talks about the $1.9 billion of cash on hand, sustainable cash flow generation, and the increased buyback program, which now totals $2.5 billion.
All right, more retail news coming from Deckers. Shares down about 10% in the after hours. Other retailers moving today. Williams-Sonoma shares falling 4.5%. Shares were down as much as 12% earlier in the session. Wall Street questioned the company's reaffirming full year net revenue guidance given its significant first quarter beat. Once again, shares down by 4.5% today. Also, I'm looking at the Invesco Solar ETF. Solar stocks did so poorly today that I had to look at the entire ETF. We saw a lot of names move lower in the double digits. As a whole, though, this ETF fell about 7.5%. It tracks the MAC Global Solar Energy Index. The biggest holdings include First Solar, Enphase Energy, and Sunrun. Stocks fell as U.S. House Republicans' new version of the tax and spending bill accelerates the end of incentives for clean energy production. Taking a look at what actually fell in there. Sunrun down 37%, SolarEdge Technologies down 25%, Enphase Energy down 19.6% today. And finally, for the sports fans out there, Manchester United down 8.6% today. So after we got some news about, well, just how they did, Romaine.
Yeah, they didn't do well.
That's
Tim,
not good.
Which always seemed odd to me. You lose and, somehow your stock goes down.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.